Hello, and thank you. Welcome to our Employer 101 Roles and Responsibilities Part 2. If you were with us last week, you know that we had to cut a section short because we had a statewide emergency fire drill. So we've tacked that on to the beginning of this part today. So we're going to go ahead and get started. As always, please feel free to ask any questions. Please feel free to use the chat function. We have Michelle Richards in there today. She can answer any questions that you might have. But with that, we're going to go ahead and get started because we have a lot of material to cover today. I think, yes, I am already where I need to be. Okay, so today we're going to cover contribution reporting and payment, additional reporting and processes. We're going to quickly cover some member services topics because it's always important for our employers to have just a high level knowledge of service credit purchase, employee benefits. And these three topics also benefit you because not only are you our employer, but you are also our member. So these three topics are also beneficial to your own member knowledge. And then we're going to quickly end with eSERS tips. So for contribution reporting and payment, we're going to cover report post pay. We're reporting payment and submitting reports, reporting adjustments, submitting payments, remitting payments, and forms of payment and penalties. So it's really important when you are doing contribution reporting for eSERS, there are three main ideas that we need you to keep in mind: report, post, and pay. So for the report portion, it's simply sending in your report through eSERS, whether it's through the upload or through the manual process. Then once all errors are corrected in the file, or you've suppressed your warnings, or if you've fixed your warnings, we require you to submit your file for posting. And this is the second step. So we've got the report, that's your post, and then pay. So once your file has posted, you immediately want to go into the payment remittance application and make your payment. So once you've uploaded your report, you've corrected all errors and warnings, we want you to go into the payment remittance application and submit your payment. The contribution report is the employer's responsibility. It details the employees for whom you report and remit contributions. Our current contribution rates are 10% for the employee contribution and 14% for the employer contribution. When you submit reports, they must be submitted through eSERS. There's no other function for you to submit your contribution reporting. You can do that through the contribution or through the manual contribution entry application or the upload contribution file application within eSERS. Once the file is uploaded and processed, eSERS will send a message to your eSERS message board. The message will tell you that your file has processed successfully, or that your file has processed, but there are errors or warnings that need your attention. When you submit a report through eSERS, we require every report to have a contribution cycle code. This is created when you create your payroll schedule. When your payroll schedule is created, it is assigned a contribution cycle code. We require a social security number and name for your employee, the period begin date, the period end date, the earnings code for that contribution. So this identifies the type of contributions that are being reported. So if you're just doing, excuse me, if you're doing a regular contribution report, you would use the O1 regular earnings code. If you are reporting a stretch pay for one of your contract employees for the summer, or one of your office staff, what have it, if you're reporting a stretch pay, you would use an O4 stretch earnings code. Then you would report the covered compensation, which is the employee's gross compensation, which is also employee earnings submitted, which is in the contribution record screen. Then the contributions, which it would be the pre-tax or post-tax contributions. The days, which are the number of days the employee is being paid for the period, or the number of hours the employee is being paid for the period. If the contributions are post-tax, the amount is placed in the employee post-tax contribution field. If the contributions are covered by an authorized and accepted employer pickup plan as pre-tax, the amount is placed in the employee pre-tax contribution field. When you submit your reports, only report the days and hours that have been paid in the earnings period that's being reported. Days and hours worked in one earnings period but paid in the following earnings period should be reported on the next contribution report. So this is really important for member account accuracy. You always want to report contributions, earnings, days, and hours in the earnings period they were reported. So if you missed days and hours, you would submit an adjustment file to move the days and hours, earnings, and contributions to the correct earnings period. The days worked cannot exceed the number of days in the payroll schedule, with a few exceptions, mainly your contractors. Contractors are always the exception to the rule. Most, or not contractors, I'm so sorry. Not contractors, your coaches. So your coaches are the exception to the rule for most things in eSERS. So let's say your coach only gets paid once a season and they're getting paid on a biweekly schedule, but you were issuing them 92 days. That's why we have the O2 supplemental earnings code, and that will allow a larger amount of days than what the earnings period requires. Oh, I already covered that. All right. So when you are reporting adjustments, you want to check that the original reporting was uploaded using the employer reporting detail lookup application. So when you are adjusting something, you can only adjust something that was already reported. So if it hasn't been reported yet, then you can't adjust it. When you report adjustments, you may need to make an adjustment for contribution amounts, tax treatment of contributions. This mainly happens with larger school districts that have multiple contractors, where maybe during the school year you will hire someone directly and they will work for the school district directly, and they are on a post-tax basis. But let's say during the summer, that individual works for a contractor for the school district, and that contractor reports on a post-tax, or no, okay, so the district would be a pre-tax basis and the contractor would be a post-tax basis. You would get a warning from eSERS saying this individual was reported in a different tax basis from the previous tax period. So if you report their tax treatment in error in the wrong field, you will receive an error or a warning for that. If you suppress it and move forward and realize you have to fix it, an adjustment would need to be done. You can always do an adjustment for your days reported, your hours reported, or if you reported to the wrong retirement system. There are two different methods of paying the employer charges. So we have the direct pay and the foundation program. So the direct pay districts would pay their employee and employer contributions in the payment remittance application directly. So they are responsible for employee and employer contributions. For our foundation program districts, they are only responsible for their employee contributions. The ODE Foundation will send us an allocated amount twice a month, and we will, or once a month, twice a month, and we will allocate that to the employer contributions in eSERS. Employers must remit employee and employer contributions to SERS no later than 5 business days after each pay date. Community schools are required to use the Ohio Department of Education and Workforce Foundation Program to pay employer liabilities. So community schools don't have an option. They are required to use the foundation program to cover their employer charges. When you need to make a payment, it is to be done through the payment remittance application in eSERS. There is no other option for an employer to make a payment. If an organization is remitting payments for multiple employers, like your contractor, we have a lot of contractors that work for multiple districts. They will have separate eSERS logins, and they will need to enter in separate remittance documents for each employer. Remittances are required for employee and employer contributions, any SCP payroll deductions, your surcharge, and penalties. eSERS accepts 3 different types of payment. We have your ACH debit, which is the preferred method of payment. Employers can activate a bank account in eSERS through the bank account maintenance application. This is for ACH debit users only. So when you do elect for ACH debit, you don't have to wait for eSERS to approve anything. Once you enter in all of your bank account information into eSERS and you submit it, and there aren't any errors like with the bank account or routing number, you can immediately go into the payment remittance application and make a payment through ACH debit. This is our preferred method of payment because not only are you entering in your payment remittance, but you're also submitting your payment to eSERS. Then we have the EFT, which is an electronic wire transfer that you initiate with the bank. While we say that ACH debit is our preferred method of payment, overall, an electronic payment is our preferred method of payment. We prefer it electronically. ACH debit is just easier because you're submitting your payment remittance and your payment at the same time. For an EFT, you still submit a payment remittance, but then you have to go to your bank to submit the wire transfer to eSERS. So for penalties, we have the contribution or your payroll reporting penalty. It's due no later than 5 business days from the pay date. The district will be penalized $100 per day for each business day you do not submit, complete, or correct contribution reporting. The contribution report needs to be submitted and posted, not in the review status, in order for the report to be considered on time. This also includes completing a payment remittance. The maximum accrued amount for this is $1,500 per report. The employer liability for reporting errors. It's the employer's obligation to report to eSERS for its employees and contractors, and eSERS relies on employers to accurately report contributions. The employer is required to reimburse eSERS for any penalties that eSERS incurs as a result of the employer reporting error. So, for example, this is a tax basis. So for pre-tax or post-tax, if that's reported incorrectly in your contribution reports, the employer is responsible for any penalties that eSERS may incur if the funds are distributed and the taxable amount is incorrectly reported to the IRS and the individual on the individual's 1099-R form. For employee contributions, they are to be remitted no later than 5 business days from the pay date. The district will be penalized $100 per day for each business day the employee contributions are not submitted on time. The penalty accrues until the contributions are received by eSERS. So there is no cap to this penalty. So it's really important to make sure that you know when your due date is for your employee and employer contributions. And I'll give you a little helpful tip at the end of this when we go through some eSERS items. For employer contributions, they are also to be remitted no later than 5 business days from the pay date. The district will also be penalized $100 per day for each business day the employer contributions are not received on time. Employers that choose to make their employer contribution payments through the foundation program are always considered on time. So we will allocate the employer funds as soon as we receive them from the ODE. So if we receive them from the ODE after the due date, we won't apply a penalty to the employer for a later allocation of the foundation program funds. This penalty will accrue until the contributions are received by eSERS for those districts that are in the direct pay program. The penalty process is that a notification will be sent to the eSERS message board advising the district that it is in penalty status. If the payment remittance was missing and a payment was received, you will receive an email from an employer services representative. Once the missing item is submitted, a penalty invoice will be available for the employer in the payment remittance application. They will also include late contractor reporting and payment. So if there is a penalty issued because of late contractor reporting and payment, it's up to the district to work with the contractor on how that penalty will be paid. So to make payment of penalties, the district would follow the same steps to pay the penalty as you would a typical contribution reporting liability. So tips to avoid a penalty: do not use the expected liability option in the payment remittance application. It's very important that you select your liability, you hit add selected to pay. It will move it down to the liabilities to pay panel. There are some employers still out there using the expected liability option in the payment remittance application. We have to keep that in the payment remittance application because in the instance that the liability is not showing in the unpaid liabilities panel, we have to create the liability. But if the liability is already showing in the unpaid liabilities panel in eSERS, there's no reason for the expected liability option to be used. That should only be used if directed by an employer services representative, and we will walk you through the process on creating that liability. So if anyone in here is using expected liabilities, let's not do it. It just helps everything stream through eSERS more efficiently. It helps prevent from any errors from happening in the reporting process. You also want to make sure that your report has posted and it's not in a review or valid status. So let's say you're in the payment remittance application and you notice your liability is not there, and you remember me saying you only use expected liabilities when you don't see your liability. However, we have to tell you when to use expected liability. So if you're not on the phone with us and we're not telling you to use expected liability, what I want for you to do is if you're in the payment remittance application and you don't see your liability, your first indication should be to go back to the contribution file correction and manual contribution entry application in eSERS. Because if you don't see your liability in the payment remittance application, 99% of the time your report hasn't posted and it's either in a review status or a valid status. If it's in a valid status, all you simply have to do is submit it for posting. But if it's in a review status, you're going to have to review the errors and warnings that are preventing your file from posting. You also want to use a current pay date when submitting an adjustment and not the pay date for the period that you are adjusting. So you always want to use your current pay date, and then within your adjustment file, that's when you will enter in the period beginning and end dates of the time frame that you are adjusting for that individual. And then finally, you want to make sure that the tax treatment, the pre and post tax, is accurately reported. And when it comes to this last bullet point, we do issue a warning saying the tax treatment of this individual was different from the prior earnings period. So it is something that eSERS will let you know, like, hey, this is something different from the previous earnings period. And so that's up for the employer at that point to do some research to see if this is accurate or not, or maybe the previous earnings period they were reported incorrectly. You always want to complete a payment remittance when submitting a payment to eSERS. If there is not a payment remittance for a payment, it is viewed as incomplete reporting and a penalty may be issued. Then finally, and I'll show you where this panel is, but when you log into eSERS, there's the eSERS home screen, and at the bottom right-hand corner of the home screen is the next 5 reports due panel. And what that is, it gives you a list of the next 5 reports that are due based on the pay dates and the contribution cycle codes that have been entered in by the district. So if you see a contribution cycle code that you're not familiar with and the pay date is coming, you might want to do some research to see what group of employees is in this contribution cycle code. Maybe call employer services and we can do a little digging for you. But you always want to make sure that next 5 reports due, you are aware of what is upcoming for your district. And we don't, before I move on to the next section, when it comes to penalties, everything is driven off of the pay date that's entered into the payroll schedule by the district. So if you know that maybe there's a software update and I mean, we all know that whenever there's a software update, there's a good possibility that your normal everyday functions aren't going to work as smoothly as they did before the update. But if you know if there's things going on that are going to hinder you from meeting your due date, all you have to do is call employer services and ask for an extension. We will extend the due date because we don't want to issue penalties. We want to make sure that our school districts are reporting accurately and on time. But if that is something that your school district can't do within that 5 business day time frame, give us a call and we will extend your payroll, or yeah, we will extend your pay date. If we find that a school district is continuously extending pay dates, we're going to look at that as like a training opportunity where someone from employer outreach, whether myself or Michelle Richards, will come out to you or maybe work with you through Zoom on maybe some training pain points where maybe we can try to get the district to start submitting on time within that 5 business day time frame. Okay. Michelle, before I move on to the um, next section, are there any questions I should cover?
Real quick, this is more me. There was a
Okay.
question in the chat asking about, I do know some districts have timesheets, so you're working with timesheets, and sometimes people are tardy. And so if you have a missed payroll that you need to send to eSERS, when you upload your current payroll, you are able to add in an extra contribution record for someone. So yes, someone can technically have 2 contribution records or 3, depending on what's going on with them. But yeah, so the question in the chat was, hey, I have someone who missed a payroll from a previous pay. How do I report it to eSERS? You will separate those 2 payrolls. So you will have 1 contribution record for the person for a missed pay. So you can report that previous payroll that you missed. So you can add in the service days and hours. And then you'll have another contribution record for the current pay for this current payroll with all their correct days and hours. So you can split it out. You are able to add in extra contribution records on your file. All right, that's
All right. So, additional reporting and processes. So today in this section, we're going to cover pickup of employee contributions, employer pickup of retirement contributions, wage certifications, our foundation program, the annual employer statement and surcharge. And I don't know, some of you are probably rolling your eyes like, oh, not the statement and surcharge, but it's always nice to have a little bit of a refresher. I know that we just came off of statement and surcharge season, but it never hurts to have a nice little refresher before we move into a season where this is very far from our brains and we don't want to think about it. So, pickup of employee contributions. For your pickup plans, the earliest effective date of a pickup plan is the date of a board action implementing or changing the pickup plan. So according to IRS guidelines, IRS pickup plans may not be implemented retroactively. So you want to notify eSERS through eSERS using the pickup plan application and include the board resolution. So in this screen, which I will, you know what, I can try to get into that now so I can show you. I have to log in really quick. Because I didn't even think. 25016. Okay, so while I wait on my code to log in, so for your board or for your pickup plans, one of the employee pickup plans is a tax deferred, I'm sorry, the employer picked up employee contributions are tax deferred for federal income taxation purposes until the member receives the contributions in the form of a refund or a retirement benefit. They are tax deferred for state income taxation purposes, but an employer should contact local taxing authorities to determine the tax treatment of a pickup plan for a city or local income tax. The employer picked up employee contributions are designated as employee contributions and refundable to the member for retirement system purposes. In order to implement a pickup plan, federal tax law requires an employer to adopt a written plan that specifies the following: the group of employees to be covered, the method of pickup, and the planned effective date. The employees in the covered group cannot opt out of the pickup plan. So I'm going to switch my screen to eSERS really quick to show you our pickup plan. So on the left-hand side are all of the options to you for all of the applications. Some of you in here may be seeing a bigger list than what you typically see in eSERS, and that's because you just don't have access to all of the applications offered in eSERS. But I am labeled the EWA for this district, so I have access to everything. So for the pickup plan, for this school district, these are the approved or the historical listings of all the pickup plans that have been submitted for this employer. So for a new pickup plan, you just click New Pickup Plan. You have to enter in the effective date. This effective date has to match the pickup plan that is being issued and that is sent to us. So whether it's the board action implementing it or if there's a separate actual pickup plan document, this effective date needs to match the effective date in the documentation that you send to us. This employee group, it can simply be treasurer or it could be administrative staff. So it could be a single person and you just want to put in their title, or it could be a group of individuals and you just want to put in the employee group title for that group. Then if it's going to be pickup on pickup, which is the additional 10% on the 10%, and you want to check mark this box. So then we have tax deferred percentage and board paid percentage. So if the board is going to pay the entire pickup, then you want to put in 10% here. If the board is only going to pay a portion of it, then you just simply want to put in the tax deferred percentage that will be taken out of the employee's check. And then the board paid percentage has to be the remaining amount to get you to 10%. Okay, so 4 plus 6 is 10, right? And then, so if it's pickup on pickup, if the board is picking up the entire amount, you just want to put 10% in the board paid percentage. And then you want to make sure you check mark the pickup on pickup box. Then you want to click choose file, and however you save the documents for the board documents, you just want to select it and click open. Okay, so this is how you enter in a new pickup plan through eSERS. So you always want to submit your documentation. The tax deferred percentage and board paid percentage, both of these fields have to total 10%, whether if all of 10% is in one field or the other, or if it's split up between the two. If it's pickup on pickup, you always want to make sure that this pickup on pickup box is check marked. Okay? And then once you submit it, it'll be in a processing type status. And that's when my coworker, Angie, will review all of the pickup documents that are submitted. And she will contact the school to let them know if she needs additional documentation or if she has any questions in regards to who is responsible for paying what. But if everything is pretty clean cut, she'll go ahead and approve it. And it'll be in the pickup plan information panel for you. Okay. So there are three types of pickup plans. We have the salary reduction, which is everyone is on a salary reduction. A fringe benefit not included in compensation, or a fringe benefit included in compensation or pickup on pickup. Salary reduction, these contributions are deducted from the employee's salaries. The employee contribution amount is included in the employee's compensation for purposes of eSERS, but is deferred for federal, excuse me, but is deferred for federal and state income tax purposes. Fringe benefits Fringe benefit not included in compensation. So these contributions are paid by the employer from the employer's funds. The contribution is not deducted from the employee's salary for purposes of eSERS or for federal and state income tax purposes. So for this, while the employer is paying this pickup for this employee, that amount is still considered employee contributions. So while the employer is paying it, the 10% for the pre-tax contribution amount will still be an employee contribution. Okay. And then fringe benefit included in compensation or pickup on pickup. So these contributions are paid by the employer, and an additional contribution on the 10% is also paid. So 10% on the 10% totals 11. This provides for a higher salary for retirement purposes only, which will affect the pension amount. Okay, so wage certifications. These are completed in eSERS. The district will receive an email notification when a member, a retiree, or a beneficiary files for one of the following applications: service retirement, survivor benefits, a refund, a reemployed retiree payment, a disability benefit, beneficiary lump sum, a transfer service, which is service that's combining with another Ohio retirement system. The most popular is being with eSERS. So when you receive a transfer service, you are simply just certifying the eSERS contributions that have been submitted, and then we will transfer that information over along with the contributions to STRS or OPERS, and then your death certification. So what happens with wage certifications, there's a notification that's sent to the EWA of the district, or those sent or assigned the wage certification role. So those two types of individuals will receive a notification from us. It'll be really generic in your email saying there's information that needs to be completed out on eSERS. It's when you once you log in to eSERS, it will show you what type of information needs to be completed. So I can show you. I'll share my eSERS home screen. So when you log into eSERS after you receive that super generic email from us, your 5 most recent messages, you'll receive an action required employer certification for retirement application. So this should indicate to you that this is what we are needing from you. So from there, this message won't give you the specific person we need it on, but we are specifically telling you what type of information we're looking for. Also, while we're here, this next 5 reports due that I was talking about earlier with the penalties, this panel will keep you up to date on your next due date for SCRS. So again, if you don't think that you can meet this due date, just contact us and ask for an extension. Okay, I digress. I'm so sorry. All right. So you want to complete the certification only when you have the final payroll information for that employee. So once you have the final payroll information for that employee, go ahead and complete the wage certification. You will start seeing currently in October, you will start seeing January 1 service retirement certifications that need your completion. We don't want you to complete them right now. Our members know that the sooner that they get their application in, the sooner we can process it, and the more on time their pension benefit will appear in their bank accounts. So it's really important that we receive accurate final payroll information. So we understand that there's a human aspect behind everything that we do, but we want the final payroll information. If there's a certification that needs to be completed for a contract employee, which in the wage certification panel, I should have just continued sharing my screen because this is almost like an eSERS demo. In the certified wages panel, It will show you all of your pending wage certifications, and it'll show you the certification type. So in the pending panel, we have a service retirement, a reemployed retiree certification, a refund certification, and a transfer certification. So for your retirement effective dates, it'll be listed in this column. If you have a certification for a contractor, if they've been entered into our system correctly, the contract company that this individual works for should follow them all throughout eSERS. So if they've been entered in correctly, the contractor name will show in this panel. So let's say you have a pending wage certification for Lightning McQueen, and you call us and you say, Lightning McQueen doesn't work for my company. I'm not exactly sure why I have this certification. And we do a little digging, or we look in this panel right here and it'll say Lightning McQueen works for PSI. And that's when we would tell you that you would have to contact PSI to receive the information that we are requesting of you, because the school district will have to enter in the certification information in Lightning McQueen's wage certification. This is one of the applications in eSERS that our contractors don't have access to due to security features. So it's up to the school district to complete a wage certification for a contractor. When an employee has service credit with another Ohio public retirement system, the system with the greater service credit will be the paying system. If eSERS is not the paying system, the employer will still need to complete a wage certification for any eSERS wage details. If an employee holds multiple positions prior to retirement, and if they choose to continue working in the lesser paying position, a wage certification will need to be completed for the wage details up to the effective retirement date. Then at that point, this employee can continue working in their lower paying position without forfeiting 2 months of pension benefit. There is a notes section in the wage certification screen. The notes section is tricky. You want to fill out the information in your certification, and if you have a note that you need to enter, submit the certification information and then open up the notes. The notes is also, it's not a space to ask questions in regards to the certification. Our processors down in member services don't see the notes section until they start to process the application. So if you have questions in regards to the certification, we ask that you give us a phone call, and we can answer that question for you directly, as opposed to in the notes section, and that question won't be addressed until the certification is processed. Okay, wage certifications, healthcare eligibility. When you complete a service retirement certification, we always ask if the member was eligible for healthcare. So is that the question? I'm so sorry. Okay, the question is eligible for healthcare at separation. So you're either going to say yes or no, but the key term in this eligible for healthcare at separation is the word eligible. They don't have to be on the school district's health insurance plan, but as long as the position that they hold for the school district makes them eligible, you would select yes. Whether if they're on your health insurance or not, you would still select yes. If the employee is not eligible for health insurance, it will then need to indicate if the employee was eligible for health care 3 of the last 5 years. So if you say that the employee was not eligible for health care at separation, you would select no. And then a separate question would then appear saying, eligible for healthcare 3 of the last 5 years. So we're trying to scoop up those employees that have always been eligible for healthcare in employment with the school district, but let's say they go down to part-time their last 1 or 2 years with the school district. And by going down part-time, that makes them ineligible for healthcare. So when you select no, that second question appears, eligible for healthcare 3 of the last 5 years. If they were eligible for healthcare the last 3 of the last 5 years, then that's when you would select yes. Because what we're really looking for here with these questions, eligible for healthcare at separation, we're trying to figure out their healthcare premiums in retirement. So someone who worked full-time for 25, 30 years for the school district should have different healthcare benefits than someone who worked part-time their entire time working for the district, right? So we're really just putting that responsibility on the employer, letting us know if they were eligible for healthcare at separation when you fill out this certification. So our foundation program. Okay. Our foundation participating districts pay through the Ohio Department of Education and Workforce School Foundation Program. These deductions are calculated annually. So late March, early April, we will start asking for salary estimates. If salary estimates have not been provided during the allotted window, SERS will calculate an estimate for the district, and that SERS calculated estimate will take the current year salary estimate and add 3% to that. So it's really important to make sure that you are entering in a salary estimate. This salary estimate window is open for close to 6 weeks because we understand salary negotiations aren't done in an evening. So we try to give the school district plenty of time to give us the salary estimate so that we have plenty of time to put together the calculations to send to the ODEW. Periodic adjustments can be made during the year based on the changing circumstances of each employer. So when you submit a salary estimate to us in mid-April, but let's say in September of the new fiscal year, you're realizing that salary estimate was either too great or too small, adjustments can be initiated by the employer or by SERS. So if we start noticing that the employer charges are higher than the foundation amount, we can make adjustments to that also. If a community school fails to remit any employee contribution payments, such amounts may be added to their deductions. If you need to make an adjustment to your salary estimate, we ask that you send us an email to employerservices@ohsers.org. In this in this email, we need you to say fiscal year 2026 new salary estimate from the old amount to this new amount. So whether if we're in October, we still need the whole fiscal year because what will happen is the ODE will recalculate your foundation program payments to us based off of that full figure, and it will make adjustments accordingly. So you just simply want to send us an email with the new updated salary estimate information. Once the salary estimates have been provided, SERS will update the foundation deduction letters. This is normally the first week of May. There is a brief window where the district can adjust the letters before the amount is directed to the ODEW. So typically, we will give the school district a week and a half to 2 weeks after foundation deduction letters have been issued to make any changes accordingly. If there are insufficient foundation funds available to satisfy the SERS Foundation program, the employer is responsible for remitting the difference directly to SERS. This will show up on your annual employer statement. Okay, so when you have a balance owed to SERS on your statement, it's because you have a shortage in your foundation program. This amount cannot be covered by new fiscal year foundation funds. We're going to get into that. At the end of each fiscal year, SERS will issue the annual employer statement. It includes contribution and payment detail for the year. The statement is found on eSERS in the employer statement application. What you will do is you will click on on the fiscal year, and then you have to allow pop-ups. And I believe most internet browsers will allow you a pop-up just for this one time. And what will happen is a PDF will appear that you can save to your desktop, you can print, you can have it at your disposal. The employer statement is divided in 2 pages. So the first page contains a breakdown of the employee activity. The statement will list posted contributions, which is your reporting, your payments, and then the net. So if there's any difference that were reported for that month, it will show up in the net. The third item showing here is the net amounts at the top of the statement in the beginning balances row will show the balance from the prior fiscal year. So this school district had a balance of $121,555.31. This is probably their employer statement balance from the previous fiscal year. For foundation participating districts, if eSERS collects your surcharge through the foundation and there are 0 foundation funds for the month of August, possibly for the full month of September, or a portion of your foundation payment is showing here for the month of September, it's because we collected your surcharge in these months. The prior fiscal year activity, which is right here, will show payment made for any prior fiscal year activity. In this example, it shows payment for the previous statement balance. So this net amount matches this. This section 6 provides a breakdown of additional types of payments submitted to eSERS. This section right here with the 7 is an additional payment type submitted to eSERS for that fiscal year. This ending balances row will show any ending balances. If you have an employee balance that is due, the amount listed in the net column right here, if there is a net employee amount due, it's due to eSERS within that 30-day time frame that we give you when we announce that the employer statement balances are available. If your district is owed a refund on the employer activity side, the refund will not be mailed out until the amount due on this employee side is sent to eSERS. Any amount due to eSERS on the statement, regardless of the amount, must be paid by the date specified by eSERS. If there is an amount due to district, a refund will be issued electronically or mailed by check. This will be issued to your district within 30 days. To receive an electronic refund, you have to have a refund box checkmarked in the ACH or the bank account maintenance application underneath a specific bank account. If your refund is $25 or less, it will reflect a credit memo for you to use against any future fiscal year liability, or you can request to have it refunded back to your district. You'll just email employer services. And as I said earlier, foundation participating districts cannot pay their statement balance with foundation funds. I already covered that. All districts, including foundation participating districts, pay their employer statement balance directly. It's important for foundation participating districts to provide a salary estimate that is as close as possible to the actual salary that is being issued for that fiscal year. So we always ask that if you notice that your foundation payment is not large enough or it's too large, to make any adjustments to that salary estimate that I mentioned earlier, to go ahead and email us with a new salary estimate for that fiscal year for that full amount. Unfortunately, if you email us in May, it's too late. We won't be able to make any adjustments at that point in time, which is why I always recommend the December, January area. If you're going to make any adjustments to your foundation, that is a really good time to do it. If your district owes eSERS or if you're receiving a large refund each year, again, check your salary estimate. That's where the issue lies. So moving into surcharge. It's an additional employer charge used exclusively to fund healthcare. It's calculated at 14% of the district between an employee's annual compensation amount and the minimum compensation amount that we issue every year. Our fiscal officers will, our actuaries will review information and they will tell us what the new surcharge amount for the next fiscal year will be. And I believe we will announce that at the end of this month. The surcharge is limited to 2% of each district's total qualified eSERS payroll. It's subject to a statewide limit of 1.5% of the total qualified payroll for all eSERS employers. So for example, the fiscal 24 minimum compensation amount was $30,000. The employee earned $7,000 and the surcharge is $3,220. The surcharge for the employee specified only works 110 days, so the prorated surcharge amount would be $1,967.42. So we don't charge them the full amount. It goes through a calculation based on the days that they worked, with the difference between what they made and the minimum compensation amount. You're able to exempt people from the surcharge. It applies to all eSERS members reported during the fiscal year, except members who retired, refunded their account, or received disability benefits effective before July 1, members who died before July 1, and Ohio reemployed public retirees. So these three bullets include individuals who aren't technically members. They've already received a benefit from us, or they aren't contributing to the system in any form at this point in time. Those individuals that don't fall on this list will be on your surcharge report. Your surcharge payment is due within 30 days from notification that the final surcharge amount has been calculated. That will have to be paid through the payment remittance application. For those of you in this training today that don't currently have us collect for your surcharge through the foundation, but that is something that you want us to do, the time for you to tell us that you want us to start collecting for your surcharge through the foundation is at the salary estimate window. So what you'll do is you will email us and tell us that you want us to start collecting for your surcharge through the foundation. That is the only time of year where you can let us know to make that change. Also, if you don't want us collecting for your surcharge, but we currently are through your foundation, that's also the time of year to make changes to that. Okay, like I said earlier, if we collect for your surcharge through the foundation, you will see that collection on your statement on the August and September payments. Okay, service credit. Michelle, are there any questions that I should cover before I go into service credit?
Yes, there was two that popped up and I'm not typing fast enough.
Okay.
There is the last two at the bottom there about the STRS employee and
Oh,
then the
you want me
reemployed
to do
retirer. I
them?
need to get to those two. Yeah, if you don't mind.
Uh, I have STRS employees who may work the food truck during the summer, which is a STRS job. These teachers will show up on my surge report. Can they be exempted? No. They are technically a STRS member and are actively submitting contributions, so they will show up on your surcharge and they cannot be exempt. If we have an employee that is a rehire, my understanding is the employee pays into an annuity. If while they are retire, the employee choose to have beneficiary receive payments after deceased, is it true? Colleen, you're gonna have to email us that question because I don't know the specific answer to that when it comes to the intricacies of beneficiaries and annuity payments. And after they pass away. So Colleen, if you don't mind emailing me or Michelle, we can answer that for you. um, okay, thanks, Colleen. All right, I think that's it.
Yep, that's it. Thank you.
Okay, sure. Okay. Service credit and earned service credit. Am I still sharing that? Yeah, okay. Service credit is accrued through contributions during employment and for other service, either at no cost or that may be purchased. The amount of an employee's service credit determines eligibility for retirement, disability, and survivor benefits, the amount of a benefit, eligibility for healthcare coverage and premium costs, and eligibility of any dependents for survivor benefits. So it's really important that a school district reports accurate service credit for an individual, because not only does this help eligibility for retirement, disability, and survivor benefits, but it also helps other aspects of eSERS membership. It will help us determine healthcare coverage at retirement and their premium costs, and any eligibility of dependents for survivor benefits. So this is if the member were to pass away, it's really important that we have the accurate contribution reporting so that we can issue survivor benefits accurately. An employee earns service credit based on paid service for a school, college, or university. 1 year of service credit upon completion of 120 or more days of paid school employment within the school year. So once someone is issued 120 days in the fiscal year, they've already accrued a full service credit year. So anything over 120 days doesn't start accruing more time for more years. It's not extra credit. It's just 120 days is a full service credit year for eSERS retirement purposes. If an employee works less than 120 days, the employee will receive a fractional amount of service credit prorated on the basis of a 180 days school year. Moving on to service credit purchase. Types of service credit available for purchase: refunded eSERS service, a leave of absence, non-contributing service with a eSERS covered employer, other government or school service, exempted service on or after July 1 of 1991. So if you were in our training last week, there is a comprehensive list of eSERS membership starting from 1937 and on. And I mentioned last week that there was a huge change in our membership starting July 1 of 1991. So if there's exempted service on or after July 1 of 1991, just go ahead and refer to that list. But if it was exempt service, that's service that they can purchase. A resignation due to pregnancy or adoption of a child, military service, or school membered service prior to July 1 of 1991. So this is all the types of service that an individual can purchase with SCRS. If the employee is eligible to purchase service credit, eSERS will send a cost letter to the employee for purchasing all or part of the service credit by making payments directly to eSERS in one or more installments by payroll deduction or by payroll deduction if the employer offers this type of payment plan. So if the employer offers a payroll deduction, then what will happen is the individual will be we will indicate that this individual is up for payroll deduction. The school district will withdraw the funds from the individual's paycheck, and then the school district will make that payment to eSERS through the payment remittance application. Service credit purchase for workers' compensation. An employee may receive additional service credit at no cost for periods the employee received workers' compensation. If the employee was off the payroll due to a school-connected injury and receiving workers' compensation, they may receive up to 3 years of service credit for this time. A workers' compensation awards history report must be provided for an evaluation for service credit. For payroll deduction, as I indicated before, if this employee would like payroll deduction and the school district is already set up for it, eSERS will send your employee a payroll deduction authorization form to be completed by both the employee and employer. The employer is responsible for submitting the employee's payroll deduction to eSERS through eSERS using the SCP payroll deduction submission application. Once you've done this, the liability will be available in the payment remittance application. Any payroll deduction purchase plan received on or after January 1st of 2019 must be on a post-tax basis. So everything before January 1 of 2019 was on a pre-tax basis. So now everything new will be on a post-tax basis. Due to the IRS's revised position on such programs, eSERS no longer accepts pre-tax pickup payroll deductions for the purchase of service credit. So employee benefits. Michelle, are there any questions I should cover?
Nope. Nope.
Okay, cool. For retirement, we're going to cover retirement eligibility, service retirement process, termination of employment and refunds, reemployment, disability benefits, death and survivor benefits, and the cost of living adjustment. Again, this is just going to be a high-level overview of employee benefits. So it's going to benefit you as our member, but it's also going to be nice for you to maybe have a high-level understanding of these topics. So if an employee were to come to you, you might be able to answer them. However, we don't want our employers to counsel your employees, our members, on this type of information. If it's a question that you don't have the answer to, this is why we're here. So either call employer services, and if it's something that we can't answer, we'll transfer it down to member services, or maybe just start with member services. But this is just a high level list of items that we just want to inform you of. So retirement eligibility is based on age, service credit, and eligibility. eSERS offers two types of service retirement. So we have the unreduced service retirement, which is your full benefit. Then we have the early service retirement with reduced benefits. This is the chart for our service retirement eligibility. So we're just going to follow this column right here. Members with less than 25 years of service as of August 1st, 2017. So for an unreduced service retirement, you'll have to be 67 with 10 years or age 57 with 30 years. So to retire with an unreduced service retirement, you would have to fall within these two categories. For an early service retirement with reduced benefits, you'd have to be 62 with 10 years or age 60 with 25 years. We have a CBBC, which is our contribution-based benefit cap. The eSERS board approved this factor that will be used under the contribution-based benefit cap analysis for retirements with an effective date on or after August 1st, 2024. The factor approved by the board is 6.25. The purpose of the CBBC analysis is to assure that the pension benefit is sufficiently supported by the contributions made by a member over the course of their working career. The CBBC factor is the multiplier for the annuity based on the member's contributions that will be compared to the standard formula benefit. So we are just trying to make sure that our employers and our members are on a consistent trajectory up and not huge, large increases that could affect their pension benefit, because overall that would affect the entire pension system. What I've just been informed of today in our team meeting is that for member statements, our member services department has created a little chart on the bottom of our member statements that gives each member an insight of the CBBC and how it might affect them. I don't know much more on that, but that is new to the member statements. The service retirement process includes many steps. So the first step is that the employee meets with the eSERS counselor, whether if that's in person or a virtual meeting. I do believe they do virtual or over the phone if you can't do in person. We understand that making the trek down here can be a little cumbersome for those that don't live near the central Ohio area. The employee will then complete the retirement application. Some members complete the retirement application in their meeting with the eSERS counselor. They will review the application with that member in that meeting. So if there's any questions on any portion of the form that the member has, the retirement counselor can answer it for them. Once the completed retirement application is sent to eSERS, the application is processed. So during the processing of the application, if there's additional information that's needed, let's say a divorce decree, possibly a trust, any additional information that's required from eSERS, we will reach out to that member and let them know. Once we've received all of the needed information to complete the application process, the employer is notified of a wage certification on eSERS. And then the employer would complete that certification once all final payroll has been submitted to eSERS. So like I said earlier, it's really important that you have the final payroll information so that the pension, so that the pension benefit is accurate and that the employee is aware of their pension benefit that they would be receiving. When an employee has service credit with another Ohio retirement system, the system with the greater service credit will be the paying system. However, even if eSERS is not the paying system, the employer still needs to complete a wage certification. So in that question that was asked earlier about teachers who teach during the day but work a food truck during the summer, or even we've been getting examples lately of math teachers that have been acting as interim treasurers also. Once they get a CPA license and they are acting as an interim treasurer and still performing their teacher duties, that is split contributions. So when they're teaching, they would report to STRS. When they are performing interim treasurer duties, you would submit contributions to STRS. So in this example, when an employee had service credit with another Ohio retirement system, they will retire from the system in which they had the most service credit. Okay. When the retiring system, when the system that they're retiring from, it's not SERS, the employer will have to complete a transfer certification. You will have to certify all of the information submitted to SERS, and then we submit all the information to the retirement system that they are retiring from. If an employee holds multiple positions prior to retirement, a wage certification will need to be completed for the wage details up to the effective retirement date. ERIs, which I don't think that there are any employers that have an ERI, but an employer may establish an early retirement incentive plan, which allows certain employees to retire early or increase the service credit of those employees eligible to retire. Employers should contact their legal counsel for advice on adopting an ERI plan. When an employee terminates employment, he or she is entitled to refund the employee contributions and amounts paid towards the purchase of service credit. The employee needs to complete an application for a refund of a member's account. Once processed, a notification is emailed to the employer to complete the refund certification on eSERS. No refund is issued before 3 months after termination. So if we were to receive contribution reporting for an individual for a refund certification within that 3 months, then we will cancel the refund certification, because it's really important to understand that when you are refunding an account, if you're not a reemployed retiree, if you're just a regular member and you are refunding your account, not only are you withdrawing your funds, but you are withdrawing your service credit. So if you were to come back in a service covered position, you would start at day one with 0 days in your account. So like we said earlier, retirement eligibility is age, service credit. After reemployed retirees terminate employment, they are eligible to receive payment from their reemployed annuity account. To receive this refund, a reemployed retiree payment application will need to be completed. So for disability, we have two plans. The old plan, which I don't think covers very many of our members anymore. but it covers members whose first date of service is before July 29th of 1992 and did not elect the new plan. The member must file application before reaching age 60. So if they did not elect the new plan, if they want a disability benefit, they would have to apply for that before reaching age 60. For those in the new plan, they cover members whose first date of service is on or after July 29th of 1992, and the member can apply for disability at any age. To be eligible for disability benefits, an applicant must have at least 5 years of total service credit, apply within 2 years of the last contributing date of service, be found disabled from their last assigned duties for a period of at least 12 months by a eSERS appointed examiner, not receiving service retirement, and not have withdrawn their accounts. So this is the criteria to be eligible for a eSERS disability benefit. The application and process includes the member contacting eSERS for a disability benefit application. This is not something that you can find online. This is something that the member would have to contact eSERS for. If you, as the employer, are noticing someone has been taking a lot of sick time, or if they're terminally ill, they will be out for a long period of time. This disability benefit is a benefit for eSERS members as long as they meet the criteria from the slide before. So as the employer, it might be something that you want to offer to them to remind them that this is a benefit for them. Once we receive the disability benefit application, we'll also require an attending physician's report, which is the member's personal physician providing a report stating the basis for the disability. The employer will receive a job duty form, and the employer will identify the applicant's current job and employment status, and they will need to provide a detailed job description. There will then be a medical examination, which will include, upon receipt of the necessary information, eSERS will appoint a physician and schedule a medical examination. The examiner will complete a detailed medical report. The processing time for a disability is roughly 3 to 5 months. So this is not a quick process. It's really important that the employer and the employee understand that this takes roughly 3 to 5 months. The final decision made by the retirement board, a written notice will be sent to the applicant and the employer. If the board denies, the member is able to appeal the decision. If the disability benefit is approved, a wage certification for disability must be completed in eSERS by the employer. A lot of times, the employer will receive the wage certification for disability before they receive the letter or final approval from the board. Basically, the board meeting that decides if they are approved or denied is basically a formality. Once we receive the approval from our eSERS appointed medical examiner, then that's when our disability department will start processing the disability benefit. Your wage certification will then appear in eSERS. The effective date on the disability benefit or the disability wage cert. Do I have one? I do not. Otherwise, I'd show you. The last day of paid service is either work or sick leave. You want to provide the date the member's completed application for disability benefit was received by eSERS. So the effective date is the first of the month following. Oh, the effective date is the first of the month following the last day of paid service, or the date the member's completed application for a disability benefit was received by eSERS. So that will be the effective date of the disability benefit. This is this is a graph of the disability benefit application process. So the member submits the disability benefit application to eSERS. The member's personal physician provides a report for the basis of the disability. The employer receives and completes the job duty form. eSERS appoints a physician and schedules a medical examination. The final decision is made by the retirement board. A written notice is sent to the applicant and employer, and the processing time is roughly 3 to 5 months. If the application is approved, the employer will need to complete the wage certification in eSERS. If the application is denied, the member receives a letter regarding the appeal process with a copy that is sent to the employer. Death and survivor benefits. At death after retirement or receipt of a disability benefit, the retiree or disability benefit recipient's beneficiary is entitled to a one-time lump sum payment of $1,000. If an employee dies while employed, the qualified survivors may apply for benefits. Report any employee's death on eSERS under the death notification application. This starts the process of contacting beneficiaries and processing any benefits. So this is helpful if someone were to pass away. Sometimes the family doesn't think to contact SERS. So by the district completing a death notification will help start getting the ball rolling on our side, and we will reach out to them. So your cost of living adjustment is a 3-year cost of living adjustment suspension is in effect for all retirees and benefit recipients for the years 2018, 19, and 20. When the COLA resumes, the increase will be the percentage increase in the CPIW, which is the same index used by Social Security, and not greater than 2.5% with a floor of 0%. As of April 1st, 2018, new retirees and benefit recipients must wait until the 4th anniversary of their benefit for COLA eligibility. Benefits that originate from the same member account will not have more than a 4-year waiting period in total. Okay, before I move on to eSERS, we have roughly 15 minutes to cover some eSERS tips. Michelle, are there any questions I should address?
Yeah, there's one. At the very bottom, can you go over if an employee is leaving employment and hasn't qualified for retirement? I was about to address that one, but I don't know, a good way to answer that. You want to take a shot? The only thing I can think of is one, their person meets half the eligibility for retirement, meaning maybe they're not of age yet for SERS retirement, so they might benefit waiting a couple of years then retiring. Or maybe if they wait a little longer to refund their account, they may be eligible for the interest on the account. What are your thoughts, Katie?
I'm So we've had employees told by SERS that they cannot withdraw their funds, and that may just be lost in translation. They may be hearing us saying that they can't withdraw their funds, but we may be saying you haven't reached retirement eligibility yet. So a lot of individuals will receive the a lot of individuals will receive they have the service credit eligibility already, so they have the 30+ years of service retirement eligibility, but they haven't met the age requirement yet. So we will ask members to wait until they reach that certain age in order to have a retirement benefit. Colleen, you might want to email us that question also. That's awfully specific, but because also let's keep in mind that we're employer services, so we don't know the specifics or the intricacies when it comes to retirement eligibility. Colleen. So we only know that greater, higher level than most employers, but also at the same time, we aren't equipped to counsel either. So when they are saying that SERS is telling them that they can't withdraw their funds, the only thing I can think of is that they've only met 50% of the retirement eligibility. And normally that's the service credit, and they still need to wait until they reach that service retirement age. But that's, Lisa, that's about the only example, and Michelle said that too. So that's the only thing I can think of why they would say that. Okay, eSERS tips. So I am going to share my eSERS screen and we can just take 5 minutes to go over a few things in eSERS. So when you log into eSERS, this is your home screen. It's going to tell you at the top of the screen your employer ID, your employer name. On the left-hand side, it's going to show you all of the applications that are available to you in eSERS. Some of you only have access to payroll reporting, so your contribution file correction, manual contribution entry, your upload enrollment files, create and correct enrollment files. So you may not see all of these applications that I mentioned before, and it all just depends on the type of web user roles that you have been assigned. If you are the web administrator, you will have access to everything in eSERS. It is your responsibility to make sure that the contacts web user maintenance screen in eSERS is correct and up to date. Um, so it is up to the employer web administrator to inactivate any web user that is not currently working for the district. So these individuals here, this payroll officer, web users that are inactive, they can only be marked inactive by the web administrator. If you are the web administrator and you need to have an update to your email, if you are the new web administrator, but you're not listed in eSERS yet, the only people that can handle web administrators is employer services. So we can make any changes to the web administrator, then the web administrator can only make changes to web users. So when you're in your home screen, you'll have your 5 most recent messages, your 5 most recent employer reporting files. So this will show you anything that's in review. Anything that's in review, we highlight in yellow because that needs your attention immediately. Any enrollments that have posted or are in review status, that will be highlighted in yellow also. Your next 5 reports due. So this is our training environment. So it's just a snapshot in time and we enter in information here. But this school district has a biweekly 1 cycle code with the next pay date being 8/15 and then the due date being 8/22. So earlier I said when you are in your payment remittance application and you are looking to make a payment, but you don't see your liability here, the first thing that you need to do is to go to contribution file correction and see if you have a file in review status. If you have a file in review or valid status, you won't see that liability in the payment remittance application. Liabilities that are showing in the payment remittance application are from reports that have already posted. Okay? What you want to do to get your file to post, you want to open up your file and review, and you want to address any errors or warnings that are showing in the header maintenance screen. Okay, so this school district has 3 files that are in review status. So for a school district, you would have to review all of the contribution reports that are in review status, whether if you have errors or warnings. There's something that I want to address really quick. I'm not going to go through correcting errors and warnings today because we have other trainings coming up that will go over that. But there is something that I want to address really quickly when it comes to eSERS, and that's the suppress warning checkbox. When an employer check marks the suppress warning, because you are able to suppress a warning, you cannot suppress an error. An error will not go away when you suppress a warning. But when you suppress a warning, sometimes you can simply suppress the warning, hit save, your record will become valid, and then you can submit the file. But when you suppress a suppress warning reason box appears. And I want to go through really quickly what we don't find acceptable for suppress warning reason, and that's entering in periods, just so that eSERS sees that there's text in there. Let's say this person has service days cannot be greater than the number of calendar days between period begin date and period end date. We might see reasons in here, someone typing in, but that's the days that he worked. That we can't accept that either. That's going to, we're going to have to call the employer at that point in time. What we want to see is we want to see actual reasons why you're suppressing the warning. Sometimes you will have that pre and post tax basis, like I mentioned earlier. And in the suppress warning reason box, you will say the employee worked for the district directly on a pre-tax basis. The employee is now on a contractor payroll and they are on a post-tax basis. That is an acceptable suppress warning reason. We just need specific reasons why you are suppressing the warning, and not simply just numbers or periods to as a placeholder. It's really important to make sure that the suppress warning reason is a detailed description as to why you're suppressing the warning. When you are in the payment remittance application and you need to apply a credit memo, just as a helpful hint, my screen is doing something very weird. We don't have credit memo showing here, but you always want to make sure you apply your credit memo first and then go in and make your payment. So the credit memo application process is kind of daunting because you have to apply your employee credit memo to your employee liability, and then you have to submit your credit. Then you have to go back in, whether if you are a direct pay or foundation participating district, you have to apply your employer credit memo to your employer liability, submit that, and then you have to go in and make your payment. So when our employers are submitting their credit memos, sometimes they get tripped up on the final step when you're down here. When you're trying to apply your credit memo, you're simply applying your credit memo first and submitting that, and then you're going in and making your payment. I mentioned earlier bank account maintenance. So if you are a school district where you aren't currently doing ACH debit, but you want to do ACH debit, you would do it in the bank account maintenance application. You would click New Bank, and then you would simply enter in your banking information here. As soon as you hit Save, you can go into the payment remittance application and you can submit your payment via ACH debit immediately. If you choose to have a refund account and you check mark this box, what it simply means is if there's ever an amount owed to the district, it will automatically be electronically deposited into this bank account. A school district can only have one refund account, and contractors don't have access to this option. So only the school district can have a refund account, and they can only have one refund account. Michelle, is there anything that I should quickly cover in the next 2 minutes?
No, I think everything looks good. Oh, real quick, go back to the contribution file that was in review. And can you just
Yeah,
show how to add a new record? So in case you miss someone on your file, you can always add them to an open file or file in review or valid.
yeah. So in the contribution information file or screen panel, so sorry. To add someone to your report underneath contribution information, you would just click New. It brings up a blank contribution record and you would enter that here. Well, thank you so much for joining us today. We do have some fun sound bites and employer education trainings to wrap up the fiscal or the calendar year. So if you have any questions though today, please feel free to reach out to us at employerservices@ohsers.org, like Michelle has put in our chat, or you can contact us at 877-213-0861. Thank you so much. Have a nice day.